we get the consumer price index number tomorrow. Consumer price index has the potential to really move the markets quite a bit here. It's either going to give us some severe warnings, or it's going to really kind of settle some nerves, if you will, about this market. We're expecting 2.6% inflation year over year tomorrow for the CPI. Core CPI is expected to be month over month 0.2%. So tomorrow's CPI and Thursday's PPI, or producer price index, will give us some good reads on inflation. So the consumer price index is definitely the event of the week, I would say, because if you get inflation that comes in nice and cool, then I think that you're still on for some soft landing talk. That being said, the dollar index would likely slide if you get, let's say you get 2.5% inflation year over year, then the dollar is probably going to drop, because what that would tell you is that, okay, if inflation's really cooling off, Fed has more room to bring down interest rates. And it's possible, guys, that if you get a really not threatening, meaning a very low inflation read tomorrow, it's possible that probabilities for a bigger interest rate cut next week, perhaps 0.5% interest rate cut, could be on the table. Now, that being said, if you get something like, let's say, 2.7 or greater, which is higher than the forecast of 2.6, if you get something high, then this is not happening, right? Then I would say it's very, very unlikely that you get half a percent cut in the following Wednesday. So we'll see. It really comes down to CPI tomorrow. Last week's jobs data, I would say, was arguably mixed slightly to the concerning side. But I don't think Friday's jobs data was enough to really decisively say, okay, we need a 50 basis point cut. So I think I'm still staying true to where I've been for the last couple months at 25 basis points is likely what we see from the Fed. It is likely going to signal that the soft landing story is still intact. And, if you get 25 basis point cuts, the dollar index may just kind of stay sideways here for a little bit. What would get the dollar index to continue its downtrend? 50 basis points would do it, right? Remember that cutting interest rates is, generally speaking, bearish for the currency. But it also depends how the Fed delivers their cut. There is something I was discussing with Frank yesterday, the possibility of what is considered a hawkish or dovish cut, right? You could get a hawkish interest rate cut, which means that they cut 25 basis points and they say, look, inflation is on its way down, but still not, fully on target. That could be a hawkish cut. If they say, the jobs data has come in okay, we're not too worried, and inflation is also something we're keeping an eye on, that would be a hawkish interest rate cut. Now, a dovish cut would say, we see some problems. We prefer to act quicker rather than slower. Maybe we see so there's such thing as a 25 basis point dovish cut, which is basically saying we're going to start 25 basis points just to go slow, but we have full willingness to continue to cut and potentially even cut faster if need be. We feel we have plenty of room to cut rates. If you get that story, you get the dovish cut. Now, this is bearish for the dollar. Whoops, wrong color. This is bearish for the dollar. This is bullish for stocks. This is bullish for the dollar. And this is bearish for stocks, right? So stocks, and then here's the dollar. I know we're messy with our writing here. cut me a break. I'm writing with a mouse and keyboard, so it's not perfect. So anyways, where we're at as we go into the consumer price index number tomorrow, I'm currently still long gold. I'm hoping for, which is a dangerous thing to do in trading, I'm hoping for a break through the highs. I'm looking for a possible breakout here. What would get us there? What would get us there would be lower than expected inflation, most likely. So we're expecting 2.6. If you get less than 2.6, gold likely is off to the races. If you get greater than 2.6, gold probably just continues to do its thing and chop around.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
Nick, are you still interested in euro-dollar buys, as you said, if price pulls back? No, because the Edge Finder was bullish in the euro-dollar, so I had a little bit more bias there, but not so much anymore. We don't see euro-dollar as a bullish setup. Euro-USD, I think, is neutral. Yep, there it is. So it's straight up 0 score on the Edge Finder, so nothing there for me. No setup on the euro. And actually, I'm glad. I think I could be wrong, but euro dollar came down. Yeah, look at this. So here's euro dollar right back at support. From a price action standpoint, I don't hate it. It's a little concerning that you might be having a lower high here, but I wouldn't call that a lower high unless we break through this low. If we close below that, then that just straight up looks like bearish price action. But we very well may just be testing this area here before we, make another move. But I don't have enough of a bias to actually execute my idea that I had over here. Would have been a nice short-term move, and I probably would have trailed my stop slightly. But the Edge Finder not having a setup for me has kept me out of this trade. And so I'm just not going to touch it. Gold, again, simple concept here. I've been saying this for like 2 or 3 weeks now. It's been really boring to watch this, but I am looking for a break one way or the other on this range. Ranges can be very, very frustrating if you are impatient, and sometimes I am, because they're just sitting here and they're like topping out here, not breaking out, falling down here, and then finding support. And the price is doing a whole lot of nothing. If you're a range trader, you probably love this. You're probably like selling here, buying here, selling here. You're probably making a lot of money just trading the range. But that's not really how I personally trade. I typically, I do primarily trade, trend following plus fundamentals, which I'm still fundamentally, I prefer bullishness on the long side, but I don't have an Edge Finder score. So I'm really just actually what the Edge Finder says here. I am neutral on gold, like very much just confidently neutral and waiting for price action to make a decision here. If we see a break through the highs, then I'm going to look for a chance. Actually, no, I mean, if we close above the highs here, my goal will be to then trail my stop loss finally on this trade into profit. And if you're familiar with my style, you already know this, but if you are newer to my live streams or trading style or video, what I look for in order to trail a stop, I don't use strict take profit levels. Like if I go show you guys my actual position, GLD, you can see I don't have a target on my trade. I don't have a take profit order. I have a sell stop to get out of the trade if I'm wrong, but I personally trail stops. So let's just say that this market makes this move for a second. Let's say we break through the highs and we close right there, then what I would look for, I can already see it here, is I would just trail this stop loss just below this level here. So I would take this order, put it right there. I'm not going to modify it, but that's what I would do if I was to see a break through the highs.
So I saw when I was sat in the back room there that Nick was looking to go long on the euro dollar. However, it went off the edge finder. However, I'm on the other side. I'm currently sat in a short position. So if we draw the fib from high to low, as always, we had a really nice rejection from this fib zone. So it's the 0.618 to the 0.5. This was, of course, driven by this was the NFP move. So I didn't really count it too much because obviously it was driven by news. However, on my personal account, I've got two positions open. I've got one at this 50% level, and I've got another one down here. So I'm currently in two positions on the euro dollar that are sitting quite nicely in profit. We've got Agricole that's also sat in short positions. Sorry, Credit Agricole is also sat in short positions, and it looks like we're about to come and break this level of support. So if we can get this daily candle to close below, I might start looking for a third position to scale into this one as well. So going back to the euro dollar position, we've of course got the macros behind this as well. So we've got the Eurozone economic weakness, industrial production in Germany contracted by 2.4% in July, driven largely by weaker performance in the auto sector. France also reported sharper than expected decline in industrial output. This disappointing data has created significant headwind for the euro. While Friday's US data was perceived by some retail traders as underwhelming, there was a modest positive, with non-farm payrolls rising from 89k to 142k and unemployment edging down from 4.3 to 4.2. This position faces headwinds from both sides. Despite signs of weakening US data, the Eurozone's economic performance has been equally lackluster, making it difficult for the euro to outperform the dollar in the near term. So when we pair that, you know, there's a big thing at the minute about the euro dollar bullish, pound dollar bullish, and it's all driven essentially by Fed cuts. And you've always got to do, when it comes down to looking at factors, whether it's GDP, whether it's inflation, whether it's interest rates, it can be anything. You've got to put it into relation to something else. So you can be super bearish on the dollar, but then you know, if you go and look at the dollar against the Turkish lira, are you gonna, you know, or sorry, that's probably not the best example actually, because that's bullish, but you know what I mean. You've got to put it into perspective with whatever currency you're wanting to go against. So euro dollar, again, let's have a look at the seasonality here. Let's do 15 years. So we draw it from anywhere really. So we do have an initial dip here at the start of September, but again, when we go to mid-September to sort of the end or start of October, typically very bearish during this period, again over the past 15 years. So when we put all that together, I'm quite happy to take this stab on euro dollar, and so far it's paying off quite nicely. And actually what I want to do is give you guys something for free. So before, anyone that watches my segments before will see that I use a Notion template to basically collect all my data and all of that stuff. However, I've moved it onto the Elite Traders website now, so you can see it all categorized really nicely, all organized. There's a brief for the week ahead and those types of things. So if you want to get, it's free. You know, there is a password, but feel free to go to the Elite Traders website. And the password is here. Let me put it into the chat for you guys. So that way, you know, it's not, you know, you don't have to pay for anything, but you can keep up with what I'm saying and you'll understand why I'm referring to certain things. So let me just catch up on the chat. Sound is off. No, it's not. Been caught with that one before, not falling for it again. Hi, James, your view on the dollar Swiss and silver. Sure, we can have a look at the dollar Swiss. I've already got a position marked up here. Let's see why. Oh yeah, okay, dollar Swiss. This one I'm not in. However, seasonally, you know, historically, we are very bullish on dollar Swiss in, I think, September to October. So I was watching this one for a seasonality play. However, going into Fed cuts, I'm not really sure I want to trade. I'm not sure I want to start buying the dollar, and especially sort of selling the Swiss, because obviously the Swiss is safe haven. So yeah, not my favorite position. However, so far it looks okay. You know, other than I guess we're technically making these lower highs, and this trend hasn't really changed yet. So something to keep in mind. However, I won't be trading that. Open positions. I'm also in the same position Nick is. Actually, I was watching his stream. I was watching for a slightly higher entry, so I was looking up here. However, again, like I said, I was watching Trading Extreme, so credit to him if this one works out. If it doesn't, I'll be sending him an invoice for my stop loss. But again, it's the same strategy I use, just with a lower high being used. So I'm quite happy to hold this one. As for the fundamentals, there's quite a lot here. We've got economic slowdown. I'll put it on screen, but I won't read it all out because it's quite boring. Economic slowdown, tourism's limited impact, corporate earnings under pressure. We've got rate hike expectations, and market positioning and sentiment. So I'll leave it on the screen for a sec so you can read it if you want to. Dollar yen. Honestly, I don't even need to look at the chart for dollar yen. It's not something I would touch. Again, we're going into Fed cuts, so match that with the current situation the yen's in. It's kind of not really something I'm too interested in paying attention to. Sorry if you can hear some background noise. We've got some family over. Hello, James. I watched your recent video on Sunday. In there, you said AUD CHF that you'll want to reach 5,700 or 0.57. If you want to take a short position, can you explain why? Is it fuel? Let's have a look at the Australian dollar Swiss. Here. So yeah, I mean, this is more of a technical position, to be honest. I actually had some research somewhere. I'm not sure where it is. I think I might have lost it or got rid of it at some point, which is a bit unfortunate. But yeah, I'm not really paying attention too much. It's more of a technical aspect at the moment. I've not done the economics behind this one. Although if we look, you know, again, just on a technical basis, we draw the fib from high to low. We've got a pretty nice level here of previous support turned resistance, looking for just a retest of this level and a break to the downside. Or if we don't get that, then of course looking for this break of support, retest, and an entry to the downside. Essentially looking to get back into this low around here. But yeah, it's a very surface level trade so far. There's not too much behind this one to back it up, which is why I'm not really looking to get into it right now.
So I closed my GLD position this morning.
Okay.
I ended up taking that Iron Condor trade.
Nice.
I got it at 52 cents, and I collected about 30% of that.
Okay.
So I closed around 36 cents. Or 38 cents, I think, actually.
Nice.
So that's what I got going on now. I have a, what else? I have a bearish call spread, which is the same thing as yesterday.
Okay.
On the SPX.
Okay.
It's a 5,500 by 55.05. So if we don't break the highs of the day, I'll collect $1.05 credit.
Very nice.
And right now it's still around $1.90, just
okay.
Fluctuating around there.
Yep.
So kind of break even right now, hoping I can get full credit by the end of the day.
Okay, let me see.
That's pretty much what I got so far.
Okay.
And then the VIX call that I still hold.
So just to put something on the radar for your SPX, you can see that I've got some kind of gamma levels all over the place here. So 5,500 to 5,510, you know, the bulls, I don't know if they're really going to go anywhere because it seemed like we have kind of equidistant pressure on both sides. So 54.50 to the downside, 55.10 to the upside. I mean, I like this. I mean, yesterday was a range day, right? I'm trying to think. We opened here yesterday and closed here, so barely a move of like 0.4%. It'd be like 0.4%. And then today, kind of the same thing as like a gap up, but just like, you know, maybe price is a little bit choppy today, not crazy directional as we're awaiting the news tomorrow. So yeah. I'm just throwing out there like the 5,500, 5,505, which is your trade. I mean, the good thing is we may have established an intraday high, and hopefully that stays, you know, safe for you. If it goes down to, you know, 54.50, I think your trade, I'm assuming it's a 0 DT, right? So it expires today.
Yeah.
Okay. If it comes down to 54.50, Frank, will you like message me in Discord and let me know where you're at? Like, because if it's $1, what'd you collect on the trade up front? $1 something?
$1.05.
$1.05. Okay. So if it comes down to 54.50 intraday, let me know what this $1.05 is trading for. Because number one, you don't have to do anything. You could probably just probability wise collect the $1.05. But I'm curious if this is trading for, you know, 25 cents, 30 cents, 15 cents. And that's pretty good, but
I see what you mean. The volatility is so high. At least that's what's expected. So I'm not going to be surprised if it goes higher, but I'm also anticipating that we kind of just stay around this zone that it's created already.
Okay.
So even if we get a broad sell-off intraday, I think it's going to come back. So I'm just kind of anticipating it to end up nowhere. And, you know, hopefully that's how it works out. But you see these past like several candles on the 5-minute chart are just kind of going crazy. So it's hard to tell where it's going to shoot for, but I think at least that it's going to sort of remain in this zone.
I do. I mean, I do too. I don't think with the big news coming out tomorrow that the market's going to do anything wild today, but you never know. And so my trade this morning was a little trade on SPX this morning. Grabbed a couple bucks there. I do have that butterfly trade on the ES. That would mean price would have to come down here. So if we did have a decent sell-off today, then there's my butterfly trade. That would be, you know, awesome to get into the profit trap. But we'd have to have about a 40 to 50 point sell-off today. I doubt that's going to happen, so I'm probably just going to eat that trade. I might end up issuing another one for tomorrow, but I might just do it after the news is out, because one thing that will happen tomorrow with CPI is this all prints at 8:30. So I'm going to watch the futures market tomorrow and then see if I can maybe pin an ES trade with a butterfly spread. Like if it's a call side, put side, I'll probably do like the put side. I'll do like a put fly. And I'm just looking for price to get trapped somewhere, you know.
What do you think is going to happen? Like I was talking to Nick yesterday, thinking that this could be a muted reaction.
Yeah.
As we focus more on labor data, but 2.6 is quite a jump.
It is
quite a jump lower from previous. So I was wondering, like, if we hit that expectation on the year over year, are we going to see some? Do you think we could see some extreme bullishness in the short term?
Well, so I don't know. I mean, I don't know. August 14th was the last print. So I'm looking at the last CPI data, right? So as the market bottomed out, August 14th was actually a quiet day, and then the day after the market gapped crazy aggressively. So the actual news itself tomorrow, I have no idea if it's going to be a big reaction or not. I mean, it does seem like a 2.9 to 2.6. If we come in at 2.6 or lower, I think the market can get pretty excited about that. I just don't think it's going to be, I don't think it's doing this. I don't think it's taking out highs, right? So a move that the market gets excited about maybe pulls right back into this level, but that sell-off candle from Tuesday last week, that sell-off candle to me is, I don't know. I think that's enough to say like, hey, good try, bulls. Thanks for bringing it back to us. And then, you know, we stay in this kind of choppy zone.
Well, here's
I still think the 200 EMA is an attractive spot.
So we all expect that cut this month.
Yep.
So if we get lower CPI, it hits expectations. This is the kind of the determining factor as to whether this cut is going to be a dovish cut or a hawkish cut.
That's a good question. So what do you say when you say hawkish cut? Is that 25 basis points?
I'm not
Hawkish
really
cut is no
considering
cut.
the amount. I'm not
Yeah.
considering the amount
Okay.
of the cut. I'm considering if inflation is higher, we're already expecting them to cut. That's going to be a hawkish cut. So that's
Right.
going to be kind of a bearish sentiment around that cut. But if we get lower CPI, and if it does drop this hard, that means we're on track. We'll probably see a 25-point cut, and that will be more of a dovish cut, in my opinion. So those are the differences. So cuts this month aren't necessarily going to be bullish, but if it's a dovish cut, then I think it's going to be more bullish than a hawkish one.
Yeah. Well, if the points aren't changing, I mean, obviously with FOMC on the 18th, there's a press conference to go with it. So I think what Powell does say will also matter to the degree of how aggressive, price is moving, good or bad. I think the Fed, as we've discussed, I think the Fed is wise to not do a 50 basis points cut, because that shows that they're wrong. That shows that they miscalculated. That shows they're behind. And so I think 25 basis points is pretty solid. What I found interesting is the Fed's only talking about, and I believe their September 18th meeting should be a dot plot, or if not, like that's coming up this month. But we should see, like, the Fed is they're talking about way less cuts than what the market is. Like, the market's looking at this thing dropping. I mean, we're at 5.25 right now, so let's go 5.25. Oops, let's go calculator. So 5.25 on the low end window to 2.75. That's a 2.5. I mean, that's crazy, dude. 5.25 minus 2.75. The market's looking at 250 basis points of cuts by next December. The Fed's like maybe a fraction of that, maybe 1.5, 1.25. So yeah. I don't know. I mean, is the Fed? It basically is the market calling the Fed's bluff, where it's just like, look, you guys say that you're going to be, maybe this, Frank. If the inflation data goes from 2.9 to 2.6, and then there's another big jump through until we have the election, November 5th, right? If we have another round of inflation data, which we will, and that will be like a 2.6 to like a 2.3, 2.4, 2.2. I think that gets the discussion that we had before. I think it was yesterday, that the 5.25 that the Fed has right now to the actual PCE of 2.6. That's where they can bring it back down to normal. And so, I mean, if the market's seeing these big drops in inflation, that gives the Fed 2.6% of cuts, and the market's saying, like, we think we're going to cut all of it, because the market's looking at this saying, we're going to be highest probability around 2.75 to 3%. I mean, hopefully PCE goes lower, hopefully CPI goes lower, and the Fed can hang out at like maybe a 2.5 to 3% interest rate. I mean, it's a ways out, but I mean, you just have to wonder, like, is the Fed doing this at the time where the market is like right on the brink of like, man, things are going to get way worse, or is the Fed actually doing this at a time where the market's like, you know what, we're okay? And I don't know. I mean, I think that buyers out there and everyone talking recession, if everyone's talking recession, this is probably more likely. And it's going to be like the irrational upside that nobody expects. But if everyone thinks like, the Fed's going to figure it out, we're cutting rates, everything's great, I don't know. I mean, but maybe it's nothing. We have to remember it never happens, but maybe it goes sideways, dude.
On CPI.
What's that?
So I think it really just depends on CPI, because we have obviously cooler jobs data.
For sure.
So stagnant or higher CPI is going to be that stagflation question.
Yep.
That's the hawkishness. And then that will probably cue the Fed to go 50. So that's worst case scenario for stocks. But if we don't really move on CPI, like say we punch in like 2.8%.
Yeah, that's what I was going to ask you, is if we're way closer to, not necessarily, like let's say we miss, we go 2.7, 2.8, but we're still lower than 2.9. I don't know if the market's going to love that either.
I don't think it's going to be much of a reaction then.
Yeah. I think for the bigger reaction, we have to have a huge miss one way or the other. So it's either, 2.6 is forecasted, but let's say it prints 2.5, 2.4. The market might like that enough to be like, okay, there's a daily rip, but I still think that's hitting a lot of technical resistance right now. So I could see the short-term rip to then I'd possibly fade that with some bear call spreads, or just hang out with my broken wings, dude. I mean, these broken wing butterflies are fine because there's a profit trap. They're not out that far. And also, if price pushes higher, I have pending orders. I'm trying to get those filled at credits that I want to take,
Yeah.
So, but if it's a miss, like let's say we print 2.9 again or 3%, I think the market's going to hate that. Even though the Fed might still cut 25 basis points, I think the market would act inversely or adversely to a higher, stickier print on CPI this week.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.